Live from Abuja, Bosun Amofaya here on Channel Television Business Morning this Tuesday, and of course in Lagos, Chimeze Obiwago.
Well, Bosun, if you would recall, even before this launch of this SSA outlook on economic outlook that is taking place today, the World Bank and the International Monetary Fund had cautioned that the growth outlook for sub-Saharan countries are subdued as GDP growth only marginally surpassed population growth, and a heavy debt burden weighs these countries down. Specifically, they say commodity exporters have not fully adjusted to structurally lower commodity-related revenues, while poorly constructed policies stifle economic recovery. Now, when we look at its April 2017 World Economic Outlook, the IMF forecast that growth in sub-Saharan countries will be 2.6% in 2017, and that's what the report they are launching today is saying, and that's compared to 1.4% in 2016. And I believe that this is also what this report today is saying, and it's talking about. The World Bank's expectation for that growth in sub-Saharan Africa is also at par with what IMF is recorded at 2.6%. Well, Dr. Bongo Adi, of course, is here, and I'm sure you want to start off this conversation with him.
Thank you very much, Chimeze. Of course, the conversation will be there, will be on for the next 15 minutes or thereabout. Dr. Bongo Adi, we thank you very much for sitting in there in Lagos. Unfortunately, I'm a little bit of hundreds of miles away from where you are today. So, but of course, we can do this as we speak. So let's bring you up into this conversation. Yesterday, we spoke on telephone about today's event, and you told me that there's been some interactions with the IMF about what is going on in sub-Saharan Africa regarding what you folks are also doing at Lagos Business School. What's your thinking into this particular report from what you said happened about a month or two months ago?
Yes, we had Mr. Amin Mati, the senior, the country representative of IMF in Nigeria, who spoke to us in the Lagos Business School Breakfast Club. That was last month in April. So, well, I think he gave the summary of that report, and I don't think he came up with anything that we in Nigeria do not know yet. I think their emphasis is essentially on the structural nature of the commodity price slump that we've witnessed. So it is not a short-term thing, according to IMF. This is going to be a permanent event. So being permanent means that the revenues of commodity exporting countries in sub-Saharan Africa, Nigeria inclusive, have been hard hit. And there is no expectation of any recovery anytime soon, given the IMF projections. And we tend to agree with them. And then the solution is, of course, what everybody has been talking about, diversification of the economy and winning the economy free or away from dependence on commodity-driven revenue. So I think that's the summary of the IMF report. Revenue has been hit. And again, because revenue has been hit, government has been running helter-skelter looking for sources to fund the budget deficit, which is quite huge, about 2-point-something trillion naira this year. So, and we realized that we observed last week, the federal government went to the debt market, and or 2 weeks ago, the bonds were rejected because investors were looking for higher yield, higher interest, in order to beat the inflation rate, which is at about 17 to 18%. So now let's put it, government bond treasury bills trading at 18%, just slightly above inflation. So I hope they are going back very soon. Now, when we look at the debt profile of Nigeria, what we notice is that it is speedily accumulating. At the last count, I think
Dr. Adi?
Yes.
So I do apologize to cut in there at the middle of the point. I'm sure Chimeze is angling to take you through some Nigeria-specific questions. But I just have one quick question for you from the Abuja studios here. This report, being launched as we speak, is titled "The Sub-Saharan Africa Restarting the Growth Engine." So take us back for about a minute or two, looking at the Africa Rising story that is now changing to restarting the growth engine. In other words, this engine has suffered some slowdown over the last few years. So how do you think we can restart this growth engine for sub-Saharan Africa?
Well, I think we need to change the narrative. First of all, let's get the facts right. Africa had an artificial growth. Many economists know this. Over the past few years, the African Rising narrative. Now, that was a narrative written around commodity price hike. And then we enjoyed that as long as it lasted. But now that that market is bust, realities have come back to haunt us, meaning that there wasn't any structural transformation of African economy. Last time I was here, I think I was talking about this as well. We had growth, nominal growth, but we didn't have any structural transformation of our economy. And we have to look at that. Now, the question is, how do we structurally transform the economy? And then we're talking about diversification. And I have also spoken to this issue of diversification because we tend to misunderstand it. We still keep going back to agricultural diversification because that, of course, is not what diversification is all about. In the world in which we live today, innovation is critical. For us to compete internationally, we need to attract foreign capital. Now, I think there is an opportunity there that has not been explored at all. We have not exploited that window. If you look at Morgan Stanley Global Commodity Index, what you realize is that the world equities have been kind of trading very low. If you look at interest rates in the United States, though it's increasing recently, but generally internationally, in some areas in the Euro region, interest rates is even negative, very close to zero, or just slightly above zero. Meaning that there is an opportunity to get investment because there is cheap fund internationally, okay? But then we notice also why that is happening. We see that commodity prices, if you look at the commodity index, generally is been going downwards. And that is what IMF is saying. There is no hope for commodities recovering anytime soon or even ever because it's a structural transformation that is taking place in the world as it is now. So we have to look at this dynamic. Equities, there is cheap fund internationally that Nigeria can tap into, but what are we doing about that?